I once again welcome all of you for the webinar on US Tariffs 2, a critical analysis, and the speaker is Mr. P.N. Vijay, Managing Director, Rainbow Digital Services. I request Mr. Prasanna Bedi, Co-Chairman of Corporate Economic Affairs and Legal Expert Committee, to bring remarks and introduction. Mr. Prasanna Bedi, over to you.
Thank you. Good evening, all the committee members and also other distinguished guests and all the chamber colleagues. It gives me immense pleasure to welcome you all to today's webinar on the US Tariffs 2.0, which is being organized by the Corporate and Legal Expert Committee by the BCIC. So I'm Mr. Prasanna Bedi, co-chairman of this expert committee. It is both an honor, I should say, and a privilege to open this important session. So in my professional capacity as a practicing company secretary also, we work with a lot of businesses that constantly navigate having these kind of changing regulatory and trade landscapes. So I think this session having today is both like timely and consequential. Like as we are seeing, there are new round of duties which have been imposed. There are so many trade restrictions which are there. So definitely we all know that these are not just an isolated kind of decisions. However, it's a broader shift in the geopolitics which we were discussing even in the a while ago in the expert committee meeting as well. So definitely through this we will through this technical session we will try to understand a lot of development related questions, a lot of trade related questions as to what is this actually means to US tariffs, what exactly is changing, or what does it exactly means to our economy. And in spite of these trade restrictions and amendments, are there any areas of opportunities to us, and how should our economy, Indian economy, should respond to this? So definitely these are all abstract questions. So to make these questions aware about and to understand the right perspectives, we have with us none other than Mr. P.N. Vijay, the expert of economy. Vijay sir, welcome you to this session. First of all, we would like to thank you for having agreed to address us all on this particular crucial topic. So it definitely gives me an immense pleasure to introduce you all in brief about Mr. P.N. Vijay. He happens to be the managing director of the Rainbow Digital Services Private Limited, which is a forward-looking NBFC backed by the venture investors and poised to become a premier provider of the financial solutions. He is also acting as a corporate advisor, including many M&A, restructuring, and strategic finance assignments as well. So, with decades of experience at the helms of corporate governance, Mr. Vijay has worked closely with all the regulatory authorities, and he has also served on some of the extreme premier boards of the respected companies. So he is also he happens to be a senior member of the Bharatiya Janata Party as well. So Mr. Vijay played a pivotal role in shaping economic policy as convener of the Central Economic Cell, and later he became the party's national spokesperson on the economic affairs. So his 6-year tenure on the BJP's national executive reflects his influence in both political and economic spheres. Absolutely. So for over a decade, Mr. Vijay was a familiar face on CNBC India, where he demystified the stock markets for millions through weekly shows and investor conferences. His insights have guided both seasoned investors as well as the first-time market entrants. So beyond the boardrooms and the broadcast studios, Mr. Vijay is deeply rooted in Indian philosophy and spirituality as well. He speaks passionately about how ancient wisdom can empower modern professionals and professions, helping them achieve excellence, balance, and purpose in their work. So, with this wonderful introduction, we are all excited, sir, to listen you. Before that, we will have welcome address by our chairman of the expert committee, Dr. K.V. Omprakash. Omprakash, sir, over to you.
Thank you, Prasanna, for good introduction and welcome all to this yet another second session on US tariff. We thought with one session it will get over. I think it's going to be a series. We are on 2.0 US tariff and impact on India. Specifically, we have the expert here, Mr. P.N. Vijay, economist, and I would request the participants and members to hear him out. We will separately have a QA session after his program or his session. We will have an interactive QA for more than 10 minutes. Whatever. We don't have any time limit. You can extend that. Let him complete. I would request all the questions can either be put in the chat box or you can shoot it in the QA session so that we are prepared. And the session is not interrupted in between so that he can finish it off he has a beautiful PowerPoint presentation prepared for this event. And he's also likely to cover the hot topic of H1B visa also. So on to you, Mr. Vijay.
Thank you very much. It's indeed a pleasure to come and discuss this topic again from this forum. We did this in early February, and can you come to the first? Can you come to the beginning slide, please? Yeah. And we were all hoping that will be the first presentation. we really hope that that wouldn't have to be a version 2.0. But unfortunately, the way the world works, things are not so simple. And here we are sitting in the same room. Exactly what we had this in
April. We had April 14.
April 14. So we're 5 months down the road, and unfortunately, things have not got any better. To some extent, things have got worse. So we'll sit and chat about this. And I think, as my dear friend Opi was saying, let's make this a participative session. After I've done my bit, which might last about 35 to 40 minutes, there are some, I know there are some people who are pretty knowledgeable about specific aspects of this topic, and one would welcome their views or comments or questions, that sort of thing, for 15, 20 minutes. So without much ado, let's start this. You know, on a very overall basis, I think the world has seen a very major change in the way global trade is being conducted. Mr. Trump, for whatever reason, has, with the enormous power that the United States president wields, decided to break complicated the structure of multilateralism that ruled global trade. Right from the Uruguay round of 1992, if you recollect, those who are followers of the subject, we used to have an organization called the General Agreements on Tariffs and Trades, which was GATT. In the Uruguay round, almost 150 nations got together and said for organized, proper global trade and investments, we should have a bigger organization called the WTO, which will set some specific ground rules for global trade and investment. After that, countries gave their inputs, and within 2 years, we had a very strong laws which were ratified by all the parliaments, the participating nations, called the World Trade Organization's rules. And we had separate agreements called Tariffs on intellectual property, we had TRIMS, which was on investments, and trade. So it was going on very well. Most people would agree. Global trade grew, and global trade grew, wealth of nations grew, and economic development took place, and all that sort of thing. Then suddenly, don't make so much noise. Mr. Trump, for whatever reason, he decided that the whole system was working against the United States, and the United States was in fact bearing the financial burden of the tariffs. Along with immigration, Trump had made this a major plank of his election contest, and so, to some extent, he had raised these issues even prior to his taking over the presidency. Now, let's get into a bit of detail and then look at what these tariffs are, discuss about it, how it affects India at the macro and micro level, what India is trying to do to mitigate this, how particular industries are getting affected, and last but not the least, where do we go from here? Sarasara. So, in this time that's allotted to me, let me give an overview of all these issues, and hopefully we'll go deeper into specific issues as the Q&A starts. Now, in the first week of February 2025, very soon after Trump became the president, he made an announcement which sort of startled the whole world. And he said he was imposing a 10% tariff on all imports of goods into the US. And he just said pharma and energy, for reasons best known to him, were exempt. And he also made some country-specific tariffs, which were applicable immediately. But then when there was such a huge furor from almost everybody in the world, he said these tariffs are being held back for 3 months and they will become effective from June 2025. And the tariffs I've given this chart for different nations were different. For a few days, people couldn't figure out why India had 26 and why had Japan had 24 and that sort of thing. Later, people figured out that the basis for the tariff calculation was a very simple back of the envelope type of calculation, which was that the trade deficit with that particular country divided by the total imports from that country. So if the US ran a trade deficit of say $40 billion with India, and the trade with total imports from India was $160 billion, India would get a tariff rate of 40 divided by 160, which was 26 or 25. So this was not based on any great research or anything, but this was the first major statement made by the US government that the old order is gone, and if you want to trade with us, these are the new rules. And then for 3 months, this was put in a bit of a hiatus, and from June, it became operational. Next slide. What happened during these three months? During the 3-month period, several countries went ahead and concluded free trade agreements with the US to mitigate the tariff impact on them. Countries that concluded FTAs included the EU group. EU group is as you know, a large group of 27 nations, big group. The second as an economic entity in terms of GDP to the US. South Korea, Vietnam, Australia, some Arab nations quickly did FTAs in this 3 period. Some other nations like Japan, Canada, some Latin American nations did limited trade deals. They were not FTAs, but they covered different sectors, large sectors where trade took place with the US. The 2 big nations in terms of size and economics and complication, India and China, decided that they would not be able to conclude an agreement in 3 months and have gone into a negotiation process. This was what happened. Now, as far as India is concerned, which is being in India, that's our real focus of attention. The US increased the tariffs to 25% on textiles, marine exports, gems and jewelry, auto parts and leather goods, and all other sundry items. They specifically exempted pharma, energy, and electronic exports from the tariff regime, from the new tariffs. So broadly, in terms of percentages, about 60 to 62% of India's exports to the US in calendar year 2024 were brought under tariffs and the rest were exempt. Next slide. Let's look at the devil's argument. Even Satan had an argument, right? When he gave the apple to Adam and Eve. So why is Trump doing this? I mean, he's out of his mind, and then if you think, definitely he's not out of his mind, he's quite a clever man. His argument is that last 3 decades after the US dropped tariffs sharply, actually in 1994, US passed a bill which reduced tariffs on almost everything to almost to zero. Unlike many other nations in Europe and all, which still held tariff barriers of 10 to 15%. Many nations set up large capacities with the sole object of selling to the US. Globalization and WTO rule-based multilateral trading system have been supportive of this because multilateralism is very different from unilateralism. In unilateralism, 2 countries sit together and do rules between them. For example, textiles. In multilateralism, US says, I charge 10% tariffs on all textiles, whether it comes from Vietnam, Bangladesh, China, India, Europe, Mexico, Brazil. In bilateralism, US says, I charge 5% from Vietnam, I charge 60% from China, I charge 50% from India, I charge 40% from rule, because I want to have a better relationship with Vietnam, etc., which is bringing in politics into what's really, this is why it's called weaponization of tariffs. If you read the media will always talk about Trump has weaponized tariffs. Trump is using tariffs as a weapon to arm his countries to supporting his worldview in politics and so forth. So, in particular, economies in East Asia and China have used the labor arbitrage and benefited hugely and become prosperous with their export-led growth. Typical examples are South Korea, Vietnam, Thailand, Malaysia, Indonesia have had superior growth rates because they have set up large capacities just for the US market. What's happened in the US because of all this. This has led to huge trade deficit in the US and to a lesser extent, large current account deficit and financing of this deficit through issue of US denominated bonds. US has financed the deficit by issuing more and more government paper. Government has financed the deficit. Next slide. These bonds have in turn been bought by the same Asian export giants from the USD they got selling to the US. Let's say China, for example. China runs a huge trade surplus with the US. What does China do with all the dollars it has? It goes and buys US bonds, US treasuries, US. Perennially, China and Japan hold the highest value of US debt. And US and Trump at least feels that's a very tough situation because if they pull the stops tomorrow, the US economy will collapse. Not that's going to happen, but he says they are very vulnerable because of that. And they also acquire American assets like Nissan acquired a lot of American companies. And there are many stories of Asian economies using the dollars they have to acquire American companies and assets. US has been able to do this because, I'm sorry, I'm getting a bit macroeconomic, but you have to understand this tariffs the way it actually is, not only from what's it doing to my textile sector, what's it doing to my gem and jewelry sector, because that doesn't give you a proper understanding of the real issues involved. US has been able to do this because USD has been the reserve currency of the world, but high interest payments have crowded out healthcare and infra spending in the US. That's a lot of words there. We can talk about it later if anybody asks a question. Basically, what's happening is, if it was any other country, India had this problem, let's say. India was importing in a big way and having a huge trade deficit. The Indian rupee will crash because the currency will depend at the end of the day on trade flows. But in the US, it doesn't happen because US buys in dollars and sells in dollars. So USD is the reserve currency of the world. So US's trade deficit does not affect the US dollar directly, but in a very indirect form. The present US government wants to reverse this by putting tariffs that increase government revenue, improve domestic manufacturing and employment. I leave it like this because we're going a bit too deep into the American economy. Many economists question this, like people like Jeffrey Sachs and some very leading economists who incidentally called his pupil Navarro, who was Trump's right-hand man in trade negotiations. He called Navarro one of the poorest students I had in Chicago. So that's a bit of a side thing which Jeffrey Sachs came on CNN the other day and said that. So economists like Sachs, who are highly respected the world over, question this. According to them, all this is fine, but you're forgetting one simple thing. US lacks competitive advantage to get manufacturing and services back to the US. And this may trigger US inflation. His point is, fine, you put tariffs. What are tariffs? Tariffs, but nothing but barriers for goods and services to come into America. Okay, you've done that. Great. But are you competitive enough to make these in the US? Do you have the ecosystem? Do you have the labor? And if so, at what cost? Are you going to replace global manufacturing supply chains with American supply chains? You don't have an answer. So if you think the magic wand, you can get all the auto manufacturing out of Korea and Japan into Milwaukee and Utah. My friend, you're wrong. And what this is going to do is this can trigger hyperinflation in the US. So most economists, not most, but several economists question the basic premises of the Trump's administration's desire to build tariff walls around the US economy with the avowed objective of protecting US manufacturing, US and generate US employment, and improve the US fiscal deficit. So this is the background. This argument goes on day in and day out, and only time can tell what really happens. Next slide. Now let's cut back gears and see what's all this mess doing for India. In the last calendar year for which we have reliable data, Indian export groups of 87 billion to the US, and it has a pretty large surplus of 45 billion. You can see that every dollar we exported, we imported only half a dollar. In terms of our GDP, it is not very much. It's only 2.1%. For China, for example, it's about 10%. For Vietnam, it's about 40%. So these numbers are very significant, the US bilateral trade for some of these Asian countries, but for India, it's pretty modest. So in this slide, you can see the different major headings under which we exported to the US. And interesting is that some of these segments are exempt from the tariffs even now. One is electronic, like India has become the #1 producer of iPhones in the world, beating China sometimes early this year. And pharmaceuticals, because the Indian pharmaceuticals, especially the generics and APIs, are a very significant part of the US healthcare system. And if that equilibrium is changed abruptly, people feel the US health system will just fall apart. So he is quite cautious in upsetting the US healthcare system, where he has his own local issues in trying to change the healthcare system. And in minerals, oil, and energy, it's mostly exempt. That's why Reliance has been able to sell diesel and aviation fuel to the US in large quantities even this year, because some of it is exempt, some of it is not, but it's too technical a subject to go into. But broadly, you can see some of the sectors, as I said earlier, about 65% is tariff impacted, 35% of India's exports are tariff exempt. Next slide. Now came the bombshell number 2 and now bombshell number 3. Okay. Secondary sanction and H-1B visas. Just to give you a little bit of background, what are primary sanctions? Primary sanctions are restrictions and punishments imposed on countries targeting that country and its entities. For example, US has imposed primary sanctions on Russia and Iran. it does not deal with these countries. Goods from Russia and Iran are banned. Its countries, US entities cannot sell things to Russia and Iran. And a few other countries are there, which US has put on a primary sanction. Secondary sanctions are sanctions directed at third countries that do business with primary sanction countries as a measure of arm twisting them to prevent doing business with the primary sanction countries. So this is a crude use of political power to stop other nations from helping nations which US perceives are hostile to its interests. So what the US did was, one fine morning, US imposed additional tariffs of 25% on Indian imports as secondary sanctions, which became effective from 27th August 2025. The reason was India is buying oil from Russia. The US administration said Russia will fall apart. Russia will be forced to stop its war on Ukraine if India and China stopped buying oil from them. Simple argument. So arm twist India and China to prevent them from buying oil from Russia. How do you impose? You tug them with big sanctions. Next slide. Then, this was not all. Last Friday, US also imposed a fee of US $100,000 to be paid by any employer who brings in a foreigner with a H-1B visa. Just for those who don't know what H-1B visa is, H-1B visa is a work permit issued by the US Immigration Authority, which allows a foreign national to work in the US for 3 years, either in the corporate sector or in academics or in research or in non-profits. So, though it applies to all countries, India will be the worst affected because probably 60 to 65% of H-1B visa holders and new issuers is coming from India and mainly in the IT sector. The US has imposed, along with that, sanctions on the India-built and managed Chabahar port in Iran. I'm sorry, it says India, in Iran. India has helped Iran build it at great cost as a sea trade route with Iran, Afghanistan, and Central Asia, bypassing Pakistan. It's a very big investment. It was a plan conceived by India and Iran 10 years ago. It became operational. It's a very good point through which they can bypass Pakistan. In 2018, US made a statement that Chabahar is not a hostile act by India and it is exempt from any form of sanctions on Iran. I told you earlier, Iran is a sanctioned entity of the US. But Chabahar, though it's located in Iran, because it's under Indian control and management, was exempt. Now, a few days ago, Trump administration said Chabahar is also sanctioned and no entity can use Chabahar port, period. Simultaneously, US is applying enormous pressure on EU, the set of 27 nations I talked about, to sanction all entities in India which involved the supply of Russian crude to India. If this happens, it will affect all Indian oil refiners, shipping companies, and related entities. It will affect all our oil companies. It will affect all the shipping companies and all those who have any dealings with Russia. Now, he's been pressurizing them continuously for the last 1 month. He's in fact threatening the EU, but EU buys the amount of crude, Ural crude that India buys from the US. EU is buying more of natural gas from the from Russia. So EU is helpless because at enormous cost, built a pipeline from the Urals to supply natural gas to various countries in the Europe. And now Trump is pressurizing them to buy from the US. The gas will be much more expensive. because Iran has also been sanctioned, so Iran gas cannot come to Europe. So Europe is really between a hard rock between a rock and a hard place. They don't know which way to look. But the way he's pressurizing EU, anything can happen. Next slide. On H1B visa, I think the previous slide. Previous slide, please. Let me talk a little bit more about H1B visa. See, some factoids and then the implications. About the H1B visa limit the America imposed was about 85,000 H1B visas per year. Out of this, 65,000 is issued on a lottery basis for applicants, and 20,000 is reserved for people who do post-graduation from US universities. That's called the master portion of the H1B visa. So clearly, 65,000 visas are issued every year. And of course, it's issued for 3 years, renewable. Out of this, a major number, the first 4 or 5 companies which have taken H1B visas are Amazon, Cognizant, Meta, Google, and Microsoft. These 5 American corporations are the highest recipients of H1B visas. And comparatively, the Indian IT majors like Infosys and Wipro and HCL Tech and Tech Mahindra are relatively lower. The reason being that they have done 2 things. One is they have built up offshoring capabilities over time, the Indian companies, so that they have created GCCs in the Indian geography and are doing more of the development work, etc., from India. Secondly, they are using the L1 route. L1 visa is a visa where a company sends people to its own offices in the US. So Infosys has a fairly developed network of offices in the US where it seconds people as a transfer from one branch to another. So all that's happening. So the impact analysis I'll do later. You will find that the impact is not that substantial. It is significant, but not that substantial. Okay, we'll go to the next. Now, what the hell's going on now? There's so much of noise, but trying to get some sense into all this. Several senior US officials, like the President's trade advisor, Navarro, have made very strong comments about India, calling it a tariff king, tariff abuser, a laundromat for the Russians, a nation that is financing Russia's war effort in Ukraine. The same sentence Trump used yesterday in his rambling speech in the General Assembly, if any of you bothered to sort of hear him there. US President has been blowing hot and cold, calling Prime Minister Modi as a personal friend, but also saying India is a tariff abuser and not cooperating and making out on an FTA. US is also threatening to impose a tariff on software exports into the US, which are now tariff-free. In this, the last one is a bit damaging because the strategy of many companies for the last 5 years has been to move away from onshoring in the US to creation of GCCs. That's why you're seeing a huge boom in GCCs in Bangalore, Hyderabad, Chennai, Delhi, NCR, and so forth. And now he's saying, right now there is no tariff on software exports. He's threatening to impose a tariff of 25% on software exports as early as the next 2 weeks. He's been making statements. There's already a private bill by a Republican senator who is close to Trump in the US Senate asking for tariffs on software exports. So far in the US, service sector has not been taxed. It's free of tariffs. Next one. Present status. India has taken a stand that its import and tariff policies are governed totally by national interest and protecting its farmers. We have repeatedly by saying that we question the American government in trying to tell us how to run our country, and we have to protect our farmers, their marginal farmers, and so forth. And our national interest demands that we have to buy crude at the lowest price possible, and the Russians are giving us a decent discount on the crude, and so why should we give up that discount? So India has been ad nauseum taking the stand, and of course America is very upset, and India says that. But that's what the official stand of the Indian government is. Now, as far as the tariff negotiations are going on, many people thought that India and US would be able to do a tariff deal, FTA, in that three-month cooling period from February to June. It didn't happen. And if you deep dive into researching why this didn't happen, the main areas of contention on tariffs appears on the tariff discussions appears to be agricultural products. The US wants to open up markets for corn, what we call maize here, for almonds, fruits, and wheat, some forms of wheat. And India is taking the stand that this will affect our farmers. And also, to some extent, India is questioning that maize is, India's stand is very complicated. I don't want to go into it, but basically, it's a method of protecting our farmers. And the US is also questioning India's opacity, as it calls it, and lack of transparency on transfer pricing, issues of sovereignty and jurisdiction. US is saying that Indian courts are notoriously bad. Contracts don't get settled for years on end. Laws, companies in India break impunity, and they go and get stay orders. Well, it takes about 6 months for a judgment on a corporate issue in the US. It takes anything up to 5 to 7 years. India is saying we are trying to do something, but it also affects Indian companies. So you're not being singled out. If you are inefficient, we are inefficient to our people also. But America is saying all this is you're doing this to protect your own businessmen. Your courts are protecting your businessmen and that sort of thing. So it got into some sort of an ugly type of confrontation on sovereignty and jurisdiction issues. And God only knows how they resolve these issues. And transfer pricing also, there's a lot of issues on transfer pricing. US is questioning, Nova is questioning a lot of Indian income tax regulations and transfer pricing, calling them arbitrary and so forth. India is hopeful that trade negotiations are going on well, and by November, India and US will have an FTA. US says India loves to talk, but is not serious about a deal. The US Commerce Secretary said this on TV. Indians love to have their negotiations, but when it comes to a deal, they back out. We can't understand them or something, he said. So there's a fair amount of frustration in America about an FTA, and we all thought we would have an FTA by June, but hopefully our Minister Goyal is still confident there'll be a deal by November. God only knows when we'll have a deal. On the trade front, coming down to numbers, Indian exports to US, after seeing a momentary uptick in April and May, are falling sharply since then as tariff impacts taken. In April and May, we had very good numbers and huge shipments as people were trying to beat the tariff deadline of June. So our first quarter numbers for the US exports are very robust. But then we have seen a very sharp decrease of about 25% in August, and September may be even worse because the secondary sanctions of 25% kicked in end August. So when September numbers are released by the Commerce Ministry sometime in first week of October, we'll find. But the fear is that Indian exports of goods has taken a very bashing last 2-3 months. Yeah, next one. Now let's look at how is all this impacting India. How bad is it? How good is it? Now, when we study impact, you study impact under different heads. And I've tried to put together 4 broad heads. three macro and one very micro to understand the impact better. First is impact on the overall health and growth of the economy. Is this a body blow to the economy, or is it all right? Are we doing okay? Where does it lie? And impact on the stock and bond markets, of course. Impact on forex reserves and Indian currency. And at the end of the line, impact on specific sectors that substantially export to the US and have been important at tariffs. Now, quickly, let's look at how we're doing on time. Okay. 7-8 minutes. Yeah. Next one. Impact of the GDP. When we look at growth statistics, GDP is one number that everybody relies on. So I will do the same thing. India's GDP has been growing at an impressive pace last few years, driven by government investment in infrastructure. It is a separate subject altogether, and many people say private sector is very, very slow, and private investment has fallen sharply for a long time, but government is making up with huge investments in infrastructure. But by and large, the GDP growth has been impressive, and India remains the fastest growing large economy in the world 3 or 4 years in a row. As the US is India's largest partner, the sanctions on key exports to the US will affect growth and employment in those sectors, bringing down the GDP. It's a very obvious statement. This may spill over into the rest of the economy also. There are fears that if textile is affected, if marine products is affected, if gems and jewelry is affected, and employment will go up. When employment goes up, income goes down, demand goes down, and demand goes down, economy goes down. All the rest of it, all these linkages will stand. So there is this fear. According to the Reserve Bank, the negative impact of the US sanctions will be marginal, and it has not revised the present GDP estimate of 6.5% for 2025-26. Even as late as last week, after the secondary sanctions, the RBI stuck to its rate of 6.5% GDP growth. Rating agencies like S&P initially reduced the GDP projection, but have now restored them to pre-tariff levels. You might have read in today's paper, S&P has stuck to its 6.5 growth, citing that the GST exemptions have, according to them, offset any possible downside in the fall due to tariffs. Final picture on the economy will depend on the duration of the sanctions and policy responses of the government of India. Yeah, the next slide. Now let's come one level below and look at stocks and bond market. Interestingly, Indian stock markets have not been affected much by this problem. The Sensex has risen to 82,102 yesterday evening from 77,860 on 1st February, a rise of 6%. This has happened in spite of very large selling by foreign investors during the period. In fact, Jefferies put out a report, the US brokerage, 2 days ago, where Jefferies said the foreign holding in Indian listed companies is the lightest last 10 years, is the lightest, including the COVID period. So foreigners have been selling in very, very large numbers right from February, almost like in panic state because of the impact on the US economy. But even then, the markets have risen 6%. This is attributable to RBI lowering interest rates, good monsoon, and most recently, major tax reforms in GST. So all this good news has spurred local investors who the mutual fund accounts in taking a positive view of the Indian market and buying into stocks which the FIIs are selling. But net, the markets haven't done badly at all. Indian markets have been in good shape due to rate reductions. I mean, as you all know, when RBI reduces rate, the bond yields go up. When bond yields go up, bond prices go up. So bond market is in fine shape. And the foreign involvement in Indian bond markets is less than 5%. So not much selling by foreigners in the bond market. Next one. Impact on Indian currency and forex reserves. Interestingly, movement of the Indian rupee and the foreign forex reserves have been contradictory. Between 1st February and yesterday, the Indian rupee has depreciated 2%. 2%. Major reason is the big selling by foreign investors. Other Asian currencies have appreciated between 2 and 5%. Most of the other Asian currencies, China, Thailand, Malaysia, Singapore, Philippines, Korea, Taiwan, all of them have appreciated because of the weakness in the US dollar. The dollar index has come down. That's a different chapter. That's a different point altogether. On the other hand, the forex reserves have grown by more than US dollars 70 billion to USD 702.97. Normally, you would expect that when there's an outflow of foreign exchange, that the reserves should come down. A major reason is in the upvaluation of the gold reserves due to sharp increase in gold prices this year. The Indian RBI authorities revalued the gold holdings of the country to market prices after a long time on the 1st of April. They are keeping a secret how much of the reserve gain is due to reserve gold revaluation, but analysts believe it could be a large figure. On the whole, one could say tariff impact on forex market has been quite muted and has not been very much. Yeah, so far we found that GDP growth stays in place, stock markets haven't done too badly, currency has depreciated a bit, forex reserves pretty robust. Yeah, next one. Now, what's the Indian government doing? Apart from making statements, is it doing something or is it just hoo-haing? Let's try and get something out of the various things the Indian government is saying it's doing. And interestingly, there's a very interesting slide on, I don't want to search because we'll be talking all day, on what the Brazilians have done. Trump is very upset with Brazil and he's been shafting Brazil just like we've been shafting India and China. And the Brazilian government has spent something like $100 billion to shore up its companies in massive payments companies. There's creation of sovereign funds and all that. I just thought I'd say it as an aside. We'll now look at what the Indian government is up to. Interacted quickly and constantly with the Indian business community and decide a strategy to renegotiate with the US. They were asking the Indian companies what should be our stance, what should we say, what should we be doing. Any number of discussions with Indian corporate organization. Assisted sectors by giving targeted reliefs. I'll come to that point a little bit later. Targeted reliefs have been provided to some sectors. Identified 40 countries which can substitute the fall in US exports and support companies to expand to those markets. So if US goes away, there are 40 other markets. Why didn't we go and tap them, create new markets? So it's trying to alert the ministers in the embassies in various countries, have food promotion, have fairs, have this, do that, get into FTA in those countries and so forth, trying to expand the basket as much as they can. Working on the myriads of procedures and non-tariff controls we have and try to bring them down. Industry has been pointing out to them, it's just not tariffs, it's not just duties. It is the horrible system that we have to work in, which makes life very complicated. For example, the logistics. The logistics cost in India to move some goods to our ports in the west or the east are anything around 15%. In China, it is 3 to 4%. So India is uncompetitive, not only because of tariffs, but because of logistics, because of procedures, because of form filling, because of controls, and so on. Something we have been saying since 1947, perhaps, that the Babu Dam that in here. So Indian industry is trying to use the opportunity to argue the government to bring down its procedures, make life easier. Government of India, of course, is saying, okay, we'll look at it. I don't know how much is done, but this is where they're saying they're working on procedures. And as we saw earlier, one of the problems with the US negotiations is also US also complaining of various delays in their judicial system, arbitration, and there's that. And they're saying we can't deal with this. It's becoming a bigger issue, and hopefully, out of all this mess, some good will come for ease of doing business in India. Spur domestic demand through monetary and fiscal measures. We talked about it. There have been many rate cuts from the RBI. There have been GST reduction very sharp. And many things have been brought from 28 to 18, from 18 to 5, and from 5 to 0. So that's pumped the economy, even up to say $10 or $12 billion in a year, put more money in the hands of people to go out and buy. And these two together are in fact playing out. If your GDP is so strong, if your results are so strong, one of the main reasons is these monetary and fiscal measures. And side by side, we are working overtime to do bilateral trade agreements with the US, EU, and UK. UK, we already done one. It's in the approval stage from the two parliaments. And EU, we are told we are quite close by the end of the year. So these are the 5-6 things the government has been trying to do. We have to see what impact that will have. Next, please. Impact on Indian companies. We had identified 4 or 5 areas where we are going to be really affected by tariffs. Let's go one level deeper and see. Gems and jewelry, according to research analysts, 25 to 30% fall in US exports is expected because of the 25% plus secondary sanctions or another 25%, making 50% duties on exports to US. Reduction on duties on imported diamonds will mitigate. In terms of employment, Surat and a few other districts in Gujarat most affected. Leather products, 25% fall in export volume, along with margin law. Kanpur and some districts of Tamil Nadu worst affected, looking to get government help to diversify markets. Marine products, 25% fall in exports to US, along with margin pressure. Andhra, Tamil Nadu, and Kerala most affected, looking to government help in diversifying markets. Next. Textiles and garments, impact of 15 to 20% on US exports. Government decision to remove import duty on cotton and also aggressively look to new markets like EU and UK or other mitigants. GST cut will stimulate domestic demand and reduce tariff impact. Auto components and other engineering products, 10 to 15% reduction in US exports, along with reduction in margins. Significant pricing pressures as US customers may twist these companies to cut margins. In auto components, what's likely happening is they may not change the sourcing because it's very tough, but they twist Indian suppliers to bite the bullet and sell at a more competitive price to them. Software, I mean, still research is being done, but 1 or 2 research houses have said because of H-1B visa, 5% fall in billing revenues of top 10 IT companies, mitigation through GCCs, offshoring of overseas professionals, bringing them back in. But there again, let's not forget that he's talking about tariffs on software exports. That will be a big negative. US tariffs, where do we go from here? India and US are both talking of an FTA between the two countries in the next 2 months. If that happens, of course, that will be a big, big step forward. However, if secondary sanctions remain due to India buying Russian oil, the FTA alone will not help. As of now, India is quite adamant on buying Russian oil, though the gain from cheap oil is far less than loss of US exports. Some research groups have said that India is gaining up to about $4 to $5 billion a year because of the differential in oil. But our loss due to US sanctions is anything up to $20 to $25 billion. So in terms of economic, it just doesn't make sense for India to buy Russian oil and get pressurized in the bargain by the US. But as you all know, it's a political issue. India needs Russia. India doesn't want to drop Russia when Russia is passing through big problems. So this decision, most people agree, is a purely political decision to continue to buy Russian oil. If EU joins secondary sanctions and the pressure from US, that will have a bad impact because EU is still a very, very large trading partner of India, and also EU controls the payment mechanism in the world. EU is the SWIFT of the EU creation based in Brussels, and the board of SWIFT company, if you see, they're all Europeans. So if they sanction the Indian banks, then the Indian entire payment system may come to a halt. So there are some very grave implications of a EU sanction. Hopefully that won't happen, but you never can tell. However, if Russia and Ukraine reach some agreement on the war in the next few months, not easy, that'll be a huge positive for India because the secondary sanctions will go and the whole environment will ease and probably an FTA may also happen. So this is the next picture we have here. Next one. Now this being my last slide. Till then, India has no option but to do all it can to help the sectors that have been affected and keep the domestic economy in good shape. The good thing is, right now the domestic economy is doing reasonably well. Recent steps of the government and RBI seem to indicate that government is pushing hard to improve domestic demand through fiscal and monetary measures. Many feel government can and should do more, especially in terms of ease of doing business and targeting specific industries for giving monetary, give a duty drawback or give some monetary compensation for affected industries. That's not happened. Sharp GST reduction, several bank rate cuts are examples of this. Rating agencies and OECD still remain bullish on the Indian growth story, which is a very, very big positive because when S&P, when OECD and Moody's are positive about India, that means quite a lot. We need to wait and watch. Basically, next 3 months are the most crucial. Reason for caution, but surely not panic because India is still growing. India is still quite strong economically. The main reason, I guess, is we are basically a domestic economy. Our exports to GDP ratio is one of the lowest in the world. So we can ride through it, but we surely get bruised. And the more things get, the bruise is going to be more. So with this, friends, I'll close my presentation. Thank you very much. And now we can discuss any points you may like to make or ask. Can you move the chat slides and put on the topic with us?
Thank you, sir.
Yeah.
And one simple question.
Yeah. Put everybody on mute.
If India is compelled not to buy Russian oil,
Mhm.
and if there are no takers for Russian oil, then instead of India,
Mhm.
what will happen to the English in India?
Not very much, not very much. I'll tell you, in terms of domestic inflation, the government of India has not passed on any of the benefits of the low Ural crude prices to the petrol pump. Very little. What the Indian government has done is has used the enormous tax savings. Let's say we are getting, we get a $5 discount. The global today's Dubai crude is say 65. We won't use Brent. India hardly buy Brent. So 65. We're getting it at 60. So we get $5 discount straight all around. That would translate to technically 5-7 rupees, but that's not taking place. So to that extent, if the flip side, if we were getting the oil only at 65, I'm assuming the government may not increase the prices. But if they do, the price increase could be as high as 4 to 5 rupees per liter. Now, fuel has a weightage of 10% in Indian city. So it's 5% of 10%. Gives you an idea of what the implication of not buying Russian crude is. But then, you know better than me, it's not pure economics that drives geopolitics.
Mr. Ravichandra?
Yeah, Ravichandra asked me a few questions through a WhatsApp message. Can I read them out? Ravi, shall I do that?
Yeah.
Okay. His questions are: 1, impact of US tariff on Indian imports and exports. I've covered that.
Okay.
H1B visa impact on Indo-US exchange rate. H1B itself, to my view, may not be such a big impact. But if there were tariffs on software exports, because the whole strategy of the industry is to move towards GCCs. We have seen that. Now, if every software that is exported is subject to a 25% tariff, that may affect. Impact on IT companies, I think I covered it in one of my slides. Impact on global trade and global economies. Oh, that's a big one. And we'll need a whole evening to discuss that. Actually, many economists globally feel that the worst thing that's happening to global trade. Global trade is based on the principle of competitive advantage. Greatest good for the greatest number is achieved if countries which have the competence to produce the goods at the most competitive price are able to service that thing, and it's a natural phenomenon. But Trump is disrupted it by turning his back on globalization. So every economy, including the US, would be affected. What extent, how much, is a different matter. So I think it's something we all have been very worried about, the movement away from multilateralism to bilateralism. Globally, till 1992, it was bilateralism, but the world achieved worlds of phenomenal growth because of multilateralism, but it's an issue.
Whether US will reduce the trade deficit because of the tariff actions by Trump.
I think I saw a report of the Fed for 31st August. US government revenues have gone up sharply.
Okay.
That's the fact. Because there is an across the board tariffs that are substantially and that has reduced the US government borrowings this financial year. I don't know about other things, but it has had a good effect on US government finances. But people are more worried about inflation.
Yeah.
You know, if you are able to get from China some furnishing or something for $2 and you try to make it in America, it will cost $5. So who is to pay for that $5? It is the American public. So people are very worried about inflation, and people don't believe that this will create a big boost to American jobs, because things are much more complicated than tariffs to get Americans to be globally competitive, especially in manufacturing or service sector. You know.
Yeah. Any other question?
Yes,
I have a question.
One last question. One last question.
I have a question.
One minute. Whether Trump's move was mistimed unless what you call US improves its competence in manufacturing and other sectors. Before that, I think if he is putting tariffs, it is not correct, right? He should have increased the local competitive advantage, competence in manufacturing and other sectors. Then tariffs make sense.
See, we have seen how Ford and General Motors, for example, have failed in global markets. Japan and South Korea and China in the EV space have been more competitive in European markets, have been in Indian market, and even in US markets. So if just tariffs alone will not make General Motors and Ford competitive, they have to, the technology has to be better, and so many things have been better. So if we believe manufacturing will jump back to America, we don't agree. I mean, I'm sorry, I don't agree with that argument at all. Yeah.
No, I have a question.
Yeah.
How long do you think this tariff will continue? Is it self-sustainable to US without expecting India to export things to US?
Indo-US tariffs or general tariffs? You're talking
I'm
about
talking about the 50%, which US has imposed on India. Is it sustainable for the US? I'm talking from US perspective.
Well, US can diversify out of India. It's not that whatever textiles it's buying from India, it can buy from Vietnam or Bangladesh, things like that. But they'll find it very difficult with this H1B visa. They'll find it very difficult. Gems and jewelry, I was reading, it's extremely difficult for them to move away from India because India has the expertise in gems and jewelry which no other country has. Leather, probably to some extent, they can move out to other Asian countries. So it's a mixed bag, but it will surely negatively impact the US consumer. But right now, Trump is not so bothered about the US consumer. He thinks he can, he is really batting for US big business, actually. He is behaving like a spokesperson of the US big business lobby. It looks like. Because none of his calculations has he taken the problems of the US consumer into his mind. Yeah.
The fact is, we had this one big, beautiful bill that was passed sometime around the 70s, reducing taxes to people. You know, if the prices go up, for example, because of tariffs, ultimately the consumers pay for it. When will this compensate? Then that was done with the intent to.
There will be rollback in the near the rollbacks of the tariffs in the near future.
Sorry, I think your voice got cracked. Can you repeat the question, please?
Sure. KSR, you can ask.
Yeah, I will repeat what my friend has asked. He says, what is the possibility of rollback of this tariff? That's what he's asking. Before I start mine.
Yeah, that's correct.
It's a very good chance.
Right, so thank you for that.
At the end of the day, more and more people in the US are saying that don't antagonize India beyond a point. What you have done to India, whether you purposely did it or not, you have taken India very close to Russia and China. If you saw all those visuals of SPO, etc. And many people are, because the Quad was created with great complexity to encircle China, Japan, Australia, India, and it was a very strong alignment to prevent the expansionism of China. Trump, with whatever intentions, he has just given a great leeway to China to expand its global policies. So many people in the US, even within the US administration, Rubio, for example, the Secretary of State, has said in so many times, our relationship with India is crucial. India's role in Quad is crucial. We cannot treat India as any other country. He has said that. So if more and more such voices come, the supposed benefits of the tariffs the US may get, they may like to forego in their bigger aim of trying to contain China. But then time will tell. I feel quite hopeful actually, because of the chemistry, the people-to-people contact, the democratic setup of both the countries, that India and the US cannot be hostile with each other too long. I don't think it is natural. Maybe I'm sounding a bit optimistic, but that's my reading.
It's a wonderful presentation, Mr. Vijay. I have been loving to hear this forex reserves building up while certain things are not happening in the way we want it. And as a whole, you have also icing on the cake is Trump impact is not much. And you also said the bilateral trade agreement with US, EU and other countries, India is solidly working on various measures, including measures, for example, the GST and whatnot. So that's a wonderful thing. And I was supposed to be asking about the bonhomie. Suddenly we found with China, which was induced by this tariff thing. Before that, I would like to say a few words that in 1947, we had the GATT, and then 1994, after the Uruguay round, we were talking about the amber box where subsidies have to be cut. We were talking about the countervailing duties where imports which are coming at competitive price because of local subsidies. There is a countervailing duty proposal under the GATT agreement coming up to the Doha 2001. But those days probably are gone, and localized, self-centered scenario is emerging. 1991, you remember our Narasimha Rao government period. We all talk about globalization. That is a buzzword those days. And now we are going to see localization. And what do you think about this? The previous question also connected with it. The sudden bonhomie with China, we did not pressurize the US to bring back the political and military situation.
This is not a correct forum because it goes.
Absolutely, yeah. But we want tariff to come down. So therefore,
I have some views on this, and let me just go off this. I think it is in India's interest to live in peace with China. Over time, we will gain more because China, if you look at the China story, they have developed amazing infrastructure, amazing manufacturing capability on their own indigenously. Maybe they have a lot to learn from them. I'll give you one small statistic. India is the biggest user of tunnel bore machines in the world. We don't produce any tunnel bore machines. We have to go to China and say, please supply tunnel bore machines for my pink line in Bangalore. After 75 years of independence, I think we can learn a lot from China in using low-cost technology, low-cost this thing. I mean, we have a border issue and things like that. But I don't think just because US wants it, we should have a hostile relationship with China. It calls for a lot of dexterity and finesse on the part of the Indian administration to be at peace with US and be at peace with China. But I'll be sad if we put ourselves totally in the American camp and become hostile to China again, because US is not reliable. Every administration will have its own spin. On 4 years, they'll be next 4 years, they'll ask for a base in Pakistan. They'll do this, they'll do that. But India should not go back to very bad days with China, I feel. Whether we are, that's my view, but people across this room have different views. But I feel we have a lot to gain from sharing experiences, technologies with China, and also improving our trade. We have a very bad balance of trade with China. They export a lot more to us. If we can improve, we can access the Chinese market, especially gems and jewelry. I was reading, China can totally replace US. There's so much demand for Indian gems and jewelry in China. I was reading. So there could be opportunities, but different people have different views. Some of them very emotionally against China. It all depends.
Thank you, sir. Thank you.
One question from my side. This H1B issue, will there be layoff by IT companies, especially those who are on the bench?
You see,
it is expected that large number of employees will be laid off. That's what is
there are about
panic.
No, 65,000 H1B visas plus 20,000 master visas are issued. 4 lakh applications from me. Out of those 4 lakh applications, 3 lakh came from India. India got 70% of this H1 visa in 2024, which means companies recruited this many people hoping to send them abroad on projects abroad. So if that hope is not there, let's say this $100,000 is such a dampener that they may just drop the idea. That will lead to layoffs here. Surely lead to layoffs.
So layoff is on course.
I would think so. I mean, I'm not gone so deeply into it, but common sense tells me if H1B is practically closed, officers who have been hired with the objective of implementing projects in the US will be asked to go.
Is there an impact on real estate?
Yeah.
Big time impact.
In cities like Bangalore, Hyderabad, considering that the boom is long, to some extent at least, driven by incomes from IT professionals.
Any questions more? We have another, we can pick up some couple of questions.
Yeah, sir, listen, US has got a huge trade deficit, 59 billion, that huge number, and something is due in December now. Now, will this tariff, whatever being imposed, whatever is collected out of it, will it be sufficient enough for them to service that what is coming in December? Okay, or again, we want to have one more round of tariff increase to fund that.
The trade deficit of the US, it is not directly a government deficit. That's not what I mean. It is by the people. Let's say there's a company, it's quite a complicated question to ask actually. What's the linkage between trade deficit, fiscal deficit, and government? Let's say there's a trade deficit. Since we are talking about a capitalist system of free market, company A in India, company exports to company B in the US. So much more of imports are there. What do? They pay in dollars. In India, company B doesn't have dollars. Indian companies cannot hold dollars. They take from RBI and pay. But in the US, they pay with their own dollars. From their own bank account, to slip, they'll send the money to India. So this deficit doesn't directly affect the US directly, like it does in India. India, immediately your exchange rate will fall. If your balance of trade is bad, India. But there, in a very fortuitous way, it will affect the fiscal deficit. Now, Trump is saying, or Trump's apologists are saying, that because of the tariffs we are getting, that fiscal deficit will be better managed. My own feeling is that it won't be better managed. My own feeling is that the US economy is going to suffer because of costly imports. That country has been ravishing itself, having a good time by production coming from low-cost economies, very cheap rate. If that party is over, they may get less income tax. Actually, they may do less tax collection. Impact is now only being felt.
Chat box.
Yeah. I feel nobody has really analyzed, thought through the impact in the US economy. That's why Fed was most reluctant to reduce interest rates. He was shouting like anything. This Fed fellow has sat the Fed governor. And only after seeing the impact on inflation for 8 months, they just reduced it. He's the boss.
Yeah. So, no, any more questions?
Chat box, I think,
Another 5 minutes.
any question, can you read it out till now?
Any question in the chat box?
No, sir.
Okay.
I think we have come to the close of the session. I thank one and all for attending this wonderful session on US tariff and impact on it. It's critically analyzed, and I thank the speaker for the day, the PN Vijay, for having meticulously. In fact, it was very elaborative, micro level PPT. I think beyond our capacity to even comprehend in such small time. Very well done, sir. Thank you very much. Thank you very much.
And I hope we don't have a version 3.0. I really hope and pray. Thank you. Thanks, everyone.
And before leaving, we can do our audience.
No. Only for the seven.
Okay.
You stand in the seven cell.
Me?
Yeah, please.
Okay, so that is normally for the chairman.
No, because the other is.
Oh, lovely. Thank you. Thank you.
Thank you very much.
Nice you could make it in person. Yeah. Small. So thank you. Now let's have more programs like this.
PN Vijay expects another 3.0, I believe.
No, I'm feeling.
So many of them feel that the whole issue will come to an end by November.
Yeah.
As the legislation or judicial system is against the country's head. Let's see what happens. It's called, people's rule is better than the president's rule. Let's see what happens. Thank you.
Every crisis is an opportunity.